Euro dollar. So although we've seen a bit of a corrective bounce on the euro in recent trade, it's hard to see the market not testing that multi-year base at 104.62 from back in March. At this point, the market is traded down so close to within proximity of that base that it would be hard to see the market avoid testing that level before any form of a significant bounce. Given that at this point any rally should be very well capped ahead of that July base, that previous support now turn resistance in the 108 area. At this point, again, only back above the 108 area would compromise the immediate downside pressure, and until then, look for continued rallies to be very well capped in favor of an eventual retest of that multi-year low at 104.62 from back in March. Sterling dollar. So cable continues to put in a series of lower tops and lower lows, with the most recent lower top being carved out at 153.36, opening a fresh downside extension towards the 2015 low at 145.66. At this point, only back above 153.36 would compromise the downtrend and put the immediate pressure and take the immediate pressure off the downside. Again, any rallies from here intraday should be very well capped ahead of the 152 area. Dollar yen. So dollar yen remains confined to a consolidation between 123.75 above and 122.20 below. A break on either end is going to be required for clear directional insight, with a move above 123.75 to open the door for a retest of the multi-year high from earlier this year at 125.85, while a break back below 122.20 would suggest that the market could be putting in an interim top in favor of an acceleration to the downside back towards the 120 area. Euro Swiss. So Euro Swiss continues to trade within a consolidation over the past several months, though overall the market is showing signs of recovery and could be poised for fresh upside beyond the September peak at 110.50 and towards 112 further up. At this point, any setback should be supported ahead of 107, with only a breakback above below 107.14 to compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has seen some nice gains in recent trade, though overall, while the market holds below recent highs that we saw going back to October at 73.82, the recovery is classified as a recovery within a bearish consolidation, and the market should be well capped ahead of 73.82 in favor of the next major downside extension towards that multi-year base just ahead of 69. At this point, again, only back above 73.82 would compromise the immediate downside pressure. Dollar CAD. So dollar CAD trades within a very strong uptrend, with this market now focused on a retest of the September 11-year peak at 134.57. A break above that level would open the door for the next major upside extension towards 140, while any setbacks should continue to be very well supported in the interim ahead of 130. Ultimately, though, only back below 128 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi remains confined to a downtrend, though the market has seen a bit of a bounce in recent trade, but ultimately any gains should be very well capped below what is sought out as a medium-term lower top in the 69 area ahead of the next downside extension back towards those multi-year lows that we saw back in August. SPX 500. So the S&P 500 has been very well bid in recent trade, although the market has been confined to more or less some form of a choppy consolidation below that high that we saw back in early November at 121.17. At this point, a break above 21.17 would open the door for an assault on the record high from May at 21.37, while inability to establish above 21.17 would suggest that the market could be putting in some form of a top, though the confirmation won't be given or at least strengthened until we see a breakback below 20.68, that low from the 24th of November. Gold. So gold is attempting to establish a bit of a bounce out from those recent multi-year lows just ahead of 1050, but the market will need to break back above 1100 to officially take the immediate pressure off the downside and open the door for a more significant rally. But inability to rally back above 1100 will keep the pressure on the downside, with the market potentially seen breaking below those 1050 area lows and towards 1000 further down. So the key takeaway right now for gold is keep an eye on 1050 below and 1100 above for a clearer directional insight into which way this market will break. That's all for now.